Welcome back. Now, before we take a look at the day's business news, let's first take a look at the stock indices across the GCC. And in our top business story, Mohammed Al-Hashemi, the president of the UAE Financial Markets Association, has said that the integration of the Abu Dhabi and Dubai markets will create one of the strongest stock markets operating in the Gulf region, the Middle East and North Africa. According to news agency WAM, Al-Hameshi stated that the integration of the markets will help attract more investors, especially foreign ones and international portfolios, which will have significant benefits for both shareholders and participants in the market, and thus the national economy. He added that the merger will also improve the performance of the financial market in the UAE and help the country to get ranked higher among regional and international securities markets. Al-Hashemi also stated that the proposed merger enables investors to conduct business from one platform and that there is no need for two securities markets in the country. He explained that greater investment, both financially and operationally, will support the share price performance and increase the proportion of profit distribution. Young Emirati attitudes towards the job market are improving, according to experts. And although the public sector is still the #1 aim for young Emiratis, this attitude is shifting. Hamza Zawali, the founder and managing director of Iris Executives, an Emiratization executive search firm, was quoted as saying that UAE national job hopefuls have started to adopt a proactive approach towards the job market, but are also competing with many preconceived ideas and outdated ways to perceive a career, which is the main challenge for private and government sector employers. He added that over the years, they have witnessed two different types of behaviours with private companies. Some would not have any structure in place or know-how when it came to hiring Emirati talent, while others have been able to adapt their HR strategies to the highly competitive Emiratization sector and are able to attract and retain a good portion of their Emirati workforce. And they are more likely to compete with government employers. Markets rallied to close the week on a positive note following an 11th hour deal in Congress, which saw the US government reopen and extend the US debt ceiling, avoiding a US default. Optimism came pouring back into the markets, taking the US dollar lower as the risk on sentiment dominated the close of the week. With the debt ceiling debate out of the way now, markets now turn their focus to the Fed Reserve and the timing of their proposed taper. Well, we earlier spoke to Gaurav Kashyap, the head of futures at Alpari Middle East.
Well, Laura, we've seen markets open the week on the front foot following the announcement that the US government shutdown has come to a successful end. We did see them raising the debt ceiling, which should buy the US Congress a couple of more months before they have to come back and address those issues again. But overall, once again, attention will focus back to the Fed and their proposed plans of a taper. Of course, Tuesday's US non-farm payroll report will be a key driver in how those discussions will go. Remember, the report has been delayed until Tuesday because of the government shutdown. We were expecting that report about 2 weeks ago, and expectations are for new jobs to be added of around 180,000. Now, we saw the previous figure come at 169,000, well below expectations, and this capped off a terrible quarter for the US jobs, where there was an average of only 148,000 new jobs added, which has been the slowest pace in the past 6 months. Now, of course, we will also be watching that unemployment rate, which has been ticking lower, but once again, that's on the back of a reducing US labor participation rate, which has fallen to a low since 1978. What that means is less people are actively looking for jobs in the US. They're more disheartened as a result of the economy, and this is what is skewing that unemployment number and which is actually creating for some misreadings. So overall, we're expecting the figure to come in below 180,000. This will be continue to support higher yielding assets against the US dollar. We expect the euro probably to test around 138.80 levels in the week ahead. Gold probably facing tight resistance at 1330, a break of which would expose 1350 levels. But overall, the US dollar is going to remain on the back foot in the week ahead. Once again, we're also in the heart of the Q3 US stock earnings season. This should be very, very positive for risk sentiment, and we should see risk appetite increasing and moving the US dollar lower in the week ahead.